What's going on, guys? It's City here with the first episode of our newest series on the VTX YouTube channel. This is VTX Trading Lessons, with lesson 1 being about the VWAP. So this is a series in which we're going to be covering a variety of topics with regards to trading and chart work that you guys have suggested to me in my Discord or over at my Instagram. If you're interested in my Instagram, then have a look in the description below. Today's episode, as I've just stated, is going to be about the VWAP. We're going to be using two pieces of content that you can find in the Discord as reference throughout this video. If you're interested in this and you'd like to gain full access, you can come over here at velocitytx.net. You can sign up, and using the code that you see on screen right now, that's code GETSTARTED, you'll be able to get your first month for just £30. Moving back to where we were at, so as I stated, the first episode of this trading series is going to be about the VWAP. I think the reason this was so highly suggested is because there's very little content over on YouTube on how to use this tool effectively, and for those of you who follow me and are within my Discord, you can see this is a tool that I'm using on a day-to-day basis. There's different ways we're going to be breaking this down. We're going to start with what is the VWAP, secondly why does it work, and then thirdly where to place the VWAP and how to effectively use it. If you enjoy this video, guys, just please leave a like, subscribe, comment on what you'd like to see next, and let's get into it. So, what is a VWAP? VWAP stands for volume weighted average price, and it's an intricate trading indicator that's frequently used by institutions. It provides a continuous curve that represents a trading instrument's average price over time, adjusted to the volume transacted at each price. You could think of it to be similar to that of a moving average, but the curve also factors in the volume transacted at each candle as well as the price. Additionally, the VWAP allows you to have a little bit more freedom than a moving average, because it has something called a pivot point or an anchor point, which is the place for the point at which you place the VWAP, you anchor the VWAP from. So from your anchor point where you place the VWAP, you're going to be able to see the volume weighted average price from that point onwards. What we're going to do now is go into a little example just to show you what this looks like over on TradingView. Okay guys, so jumping into TradingView now, to get the VWAP up, what you're going to do is go to Trendline Tools, all the way down to the bottom, we have Anchored VWAP. You take your VWAP, you anchor it from the point of choice, and what it does is provides a curve, a white line, which is the VWAP itself, the actual volume weighted average price, with an upper bound and a lower bound. Without going too deep into the mathematics behind this, essentially, it's representing an upper bound and a lower bound of the volume weighted average price. If you'd like to know more about the mathematics behind this, then you can get access to our full report over at velocitytx.net. So just at face value, what you can see is we've interacted with the VWAP here, rejection, interacted with it here, rejection, and we're having some kind of interaction now. Maybe if we get above the VWAP, we start moving to the upside, maybe we get back below the VWAP, and then we show the rejection once more. But as you can see at face value, this is improving intrinsically valuable. If we just double click on the indicator here, you can see that the inputs I'm using, so bands multiplier just 1, this is showing how many bands we have. If I turn on bands multiplier 2, and 3, okay, it'll show us some extra upper bounds and lower bounds. Each bound is giving us one standard deviation plus or minus one standard deviation of the volume weighted average price itself. However, I usually just stick to one standard deviation. I think it looks much cleaner and tends to play out more frequently. Moving back to the settings once more, style, you can have the style of choice. I'm using red as our top VWAP and bottom VWAP, and then white as our VWAP itself, and then visibility settings remain unchanged. So that's how you bring the VWAP up, and those are the settings I'm using. So what I'd just like to have a brief look at here right now, guys, is the equation that we use to actually determine the VWAP. So we have this equation here: volume weighted average price is equal to the sum of price times by volume divided by the sum of volume. If we break that down into pure English, we're essentially dividing the total dollars transacted, which is our price times volume, divided by the total volume transacted, and this is since the pivot point from which we anchor the VWAP. That's the calculation we use to determine the VWAP. Something else which is interesting to note, if we highlight it here, is the price of each candle. We actually determine the average price of the candle to be the high of the candle plus the low of the candle plus the candle close, all divided by 3. That's going to provide a candle's average price. So you might ask the question of, why do we care about this? What use is the VWAP to us? And the reason why the VWAP has an intrinsic value in a sense is because the volume transacted at each price will be indicative of relative demand at each price. So the VWAP is allowing us to look at the market from another perspective. It's allowing us to look at a market from volume and liquidity perspective. And in short, VWAP is a very simple and quick and effective way of us to evaluate demand from a database perspective, and that's going to allow us to reduce assumptive behavior. And ultimately, that's what we're attempting to do in this market. When it comes down to charting and chart work, lots of people have their own biases and they find it difficult to overcome them. VWAP is one of the few indicators that you can use to eliminate that bias and look from a pure database perspective. So you might ask yourself now, well, why does the VWAP work? So of course we just explained that it's indicative of relative demand at each price. But why is there going to be demand at these prices, you ask? Well, one of the primary reasons is because large institutional trading bodies tend to use the VWAP in a more algorithmic form of market participation. It means that there's going to be large buys and large sells executed at the VWAP levels, which is going to ultimately cause movements in the price. In a sense, you could think of it as a self-fulfilling prophecy. These institutions are going to use the VWAP on both a short-term intraday and a long-term intra-month, let's say, basis. On an intraday basis, they'll be continually profiting from algorithmic arbitrage. They'll be taking buys and sells above and below the VWAP, and they're going to be doing so in anticipation of the price reverting to its mean, its volume weighted average price. In the longer term, however, let's say intra-week or intra-month, these institutional bodies, they may use the VWAP as a benchmark from which they can build positions and continually enter to build larger positions for themselves or for their clients as the week and month develops. But at the end of the day, institutional traders are playing the market via statistics and probabilities, the mathematics of which is regularly dependent on the mean. And since the VWAP is going to be such a effective way of defining the mean, it's often used as reference and confluence for these positions to be taken because it provides us with an empirical definition of the instrument's mean value. What we're going to do now is get into a couple of examples to show you how this works on both an intraday basis and an intra-week basis. So just taking a quick look at this example here, we've got the VWAP anchored from these lows. We kind of had a bit of a bullish surge. We reverted to the VWAP one time. We had a reversion to the mean as I've labeled here. Moved up again. Once we pulled back, reversion to the mean again. Eventually we pushed up and had a drive forwards. This is on the 1 hour chart, more of an intraday basis, so you can see when the VWAP or the price is reverting to its volume weighted average price, there's going to be an influx of orders, especially you can see indicative by these by the wicks to the downside. There's an influx of orders which are often algorithmic participation, and then the price rallies to the opposite direction. So this time, however, we're looking at the 1 day chart, so more of a long-term basis. And as you can see, we've taken the VWAP from this swing high up here. We've tapped into it once to the downside, drove into it here, drove into it again, and again, rallied to the downside. And this is more indicative of position being built over an extended period of time. Potentially a client has contacted a particular institution to say, all right, I wanted to build a larger short on gold, and what these institutions will do is slowly build this position and use VWAP as one of the indicators or one of the benchmarks from which to build it. So as we basically take it from these swing highs, once we revert back into the VWAP or into the volume weighted average price, the mean, we actually rally back to the downside because of the influx of orders produced by these algorithms. And just one more example again, for the sake of things, we're on the 2 hour chart for gold again. We've anchored our VWAP from these highs here when we had the massive candle to the downside. We've initially tapped into the VWAP 1, 2, 3, 4, 5 drives into it. Move to the downside, drive into it, move to the downside, drive into it, move to the downside. So again, every time we're reverting to the volume weighted average price, we're getting slammed straight back down, and just because of the speed at which this is occurring, you can also show this is indicative of algorithmic participation rather than humans like you and I taking the trades ourselves. So now the question becomes, where do you place your VWAP for it to be most effective? There's a couple different ways to thinking about it, but there's one primary way that I'm going to be going over and covering today. Just before we get into that though, lots of other people, especially intraday traders or scalpers if you will, they like to place it on a time-based interval, whether that's going to be a session open, a weekly or monthly open, whatever that may be. You may find some success doing this, but because of the way that I'm trading and trying to integrate it with my price action based system, I'm going to be explaining a different way of placing the VWAP, which is going to be from either swing highs or swing lows. So as we state here, to increase the optimization of VWAP in your trading strategy, you'll find it more useful to anchor the VWAP from swing highs and swing lows. And importantly, you want to do this in areas which are in confluence with regions of high volume. So the reason for this, a swing high and low, or swing high or swing low, sorry, with high volume is an indication that a new trend has started. So anchoring from this area is going to provide us with the average price since the start of that new trend. And what you tend to be doing in trading is you are trading the trend that is currently occurring. So anchoring your VWAP from the start of this new trend is also very, very valuable. You're going to be looking at data from that new trend onwards, which is all you tend to really care about in these markets. I'm going to get into a couple examples now, or instead recover some of those same examples again, just so you can have a look. So looking at this S&P chart here again, the one that we just covered, we have our swing low down here. The candle with the highest volume, which was this one right here, is the one we've anchored it from. As you can see, this has defined our new trend. Initially we were in a downtrend. Since this candle we've defined an uptrend, and ever since then the VWAP has been continually respected. And now just quickly re-looking at that gold chart again, we've taken our VWAP from this lower high, the definition of the new trend. So initially we were trying to rally. Ever since we formed this lower high, we had downwards momentum to the downside. And ever since this lower high, the VWAP has been respected as resistance time and time again. So at this point, we know what the VWAP is. It's the volume weighted average price. We know why the VWAP works, because institutions use it as a baseline or a benchmark for relative demand at each price, and we know where to place the VWAP from swing highs or swing lows with large volume clusters. So now we're going to discuss how do we optimally use the VWAP. So rather than use it by itself, the VWAP is optimally used in confluence with your analysis, almost as an additional confirmation for the setups you're already planning out. If the VWAP is aligning with your setups, your levels and your analysis that you're already preparing to action from, you're just going to use that to simply further consolidate your ideas, provide greater confluence in your chart work, and maybe increase the risk, or at least increase the confidence in the position you're taking. Now we're going to get into a couple examples to just show how I like to use it, some prime examples of how I would use it in my trading strategy. So on this first example that we got here, guys, here's a little trade that I'd taken on GBP JPY the other week. We've taken our VWAP from this swing high. It's in confluence with our volume cluster down here. Initially we were being resisted by the VWAP once and twice. Eventually we got above it. Once we started retesting the VWAP in confluence with our SR zone, you can see all these wicks to the downside. This is indicative of demand, so I was happy to take this position. I eventually took the trade around here at just above 165.25, and we moved straight towards our target, which were the swing highs. So this is just a clear example of how to use the VWAP, a prime example in fact. We have a clear SR that we're happy to take action on anyway, and our VWAP perfectly lined up with it. As we showed the demand above the VWAP, we're happy to take longs to our target. So the final example I want to look at here, guys, is a short that I had taken on gold. We anchored the VWAP from this swing high in confluence of our volume cluster. The VWAP was being supported, acting as supporter at some points initially. We had a deviation of it. Retest. Once we retested it here, I decided to take the shorts in confluence with our SR zone as it is. Again, we came up, we rid the short for a while, retested into the VWAP perfectly, and then moved straight down towards our target. So it's almost the exact same thing, but this time in a short setup. What you're looking for is the VWAP to come in confluence with your already existing SR regions, and you're going to use that as additional confidence in your position. So, in summary, VWAP, volume weighted average price, provides a continuous curve representing the trading instrument's average price over time adjusted to volume. VWAP is calculated by the sum of price times volume divided by the sum of volume. You can place the VWAP from a particular point known as the anchor, and that allows you to have a bit more freedom when using the VWAP. VWAPs are often used by institutional trading bodies in more of an algorithmic sense. This means that they often act as self-fulfilling prophecies. One of the most important things is VWAP is a very simple way for us to evaluate demand from a pure database perspective, and this reduces general error and assumptive behavior. You can anchor your VWAP from key opens and session opens, trading session opens, whatever that may be, the monthly open, weekly open, Asia open, or what we prefer is to anchor it from key swing highs and swing lows with high volume. The reason we like the swing highs and swing lows with high volume is because this is an indication that a new trend has started, and being day traders that the majority of us are, we like to trade the particular trend at that time. You want to use the VWAP as additional confirmation for the setups that you already have planned out, And one of the more important things is VWAP is applicable to all and every time frame because there exist traders, especially at an institutional level, on each and every time frame. However, I believe VWAP is optimized for the intraday and intra-week trading because these timescales are much less affected by changes to the macroeconomy. Thank you for making it to the end of this video, guys. If you gained any value from the video or you enjoyed what you saw today, then please leave a like, subscribe, also comment down below what you'd like to see next. If you'd like access to the reports that we've been referencing throughout this video, then you can go to velocitytx.net. You can sign up with the code that you see on screen right now. That's code GETSTARTED, GETSTARTED, and you'll get your first month for just £30. But like I said, any other suggestions on what you'd like to see from us, whether that's going to be trading lessons wise or any other content for that matter, then please leave it in the comment section down below. I'm going to be back here same time next week with our next video. Cheers, guys.